Thursday, December 5th, market analysis. Stan Ehrlich. Good morning, 10:03 California time. I start out with stock market indexes, go to futures, and tomorrow I'm going to start to detail the exact time of day and dates to buy for the Santa Claus rally, which has a very good historical track record, not quite as good as the October lows, which didn't work this year, but still has a historical record that's great. And the Santa Claus rally is my second favorite. Maybe it'll work great this year. No guarantees. I'll explain it in detail tomorrow at the end of my YouTube. Here we go. E-mini, started with EM. New high ground, overbought, second day. Conditions are ripe for a turnaround to the downside. Now, just because they're ripe doesn't mean it's about to happen today. It could. I love to see overbought conditions and a new high and watch for a bearish engulfing, which has not happened. If it does happen today, we'll have a red bearish engulfing signal like on that date, like on that day, on that day, on that day. And all of these that are red and circled are red bearish engulfing sell signals. Not that they all worked exactly the way I like them to work, but they are mostly at the top of rallies or very close. So I watch for the bearish engulfings after being overbought and scream bloody murder that the market is likely to come down and then figure out how far. So overbought conditions could mean it's about to turn down. Don't get out of your longs yet. Keep raising your protective sell stop under the market. Maybe frequently, meaning multiple times a day. At least as we're making new highs for the trend, probably should do it once a day. It depends on your trading style, philosophy. Are you short-term, intermediate-term, swing trading, or investor type long-term? Totally depends upon that. But nevertheless, I think it's about to turn down very, very soon. Next chart is our I've actually changed today to a 10-minute chart on the stock indexes, showing you usually the last month or so and how the market has climbed up and down during the last month on a 10-minute chart and made new highs for the trend for the last few days. But again, daily data shows yellow, overbought, and now we're at approximately 80 and a 24. Now, that is pretty high. The last time we were at 80, red topped out, topped out, topped out. Well, maybe it didn't quite get to 80. Yeah, it did, apparently. Late May, middle June, early July. We haven't been this high on the RSI scale. My custom RSI is different than Wells Wilder's. I learned RSI from Wells himself, late 70s, 80s. And I've customized it to more current market conditions and et cetera. So this is high. I'm very concerned that you have to be on your toes here about potential beginning of a break. Again, if you don't care that it comes down for a week or two to maybe 59.50 because you're a longer term investor, I expect that to happen and then probably to turn back up. November and December are historically strong months. So any downside correction, which I think is very likely to happen, may not go down very far and may not last very long. Right into the Santa Claus rally would be great. And I'll tell you right now, I'm buying 1 and 2 and 3 days before Christmas, trading days before Christmas. And I'll tell you tomorrow at the end of my YouTube exactly what time of day and the historical testing that I did to find out why that time of day has been, hopefully will be, in the future, a good time to consider being a buyer. Let's look at the next chart, and this is still the E-mini 10-minute. We're looking at Spider Daily, pretty much the same commentary, although we have some gaps to close, a little bit lower, not a lot. And we have all of these upward slanting wedges or channels to deal with, which started approximately the early part of August for the indexes overall. And we're near the high of that channel. Another reason, back up to the E-mini again, another reason to believe the market is close, maybe not quite there, to a high. Spider again daily, 10-minute. Nothing new. QQQ, close to the high of the channel or wedge, overbought, gaps to close. This is a very likely spot we're about to hit that is a high degree of probability that it's going to turn down. 10-minute chart, still climbing. NASDAQ, same thing. Very high overbought. Last couple of days, close to the top of the pattern. Watch out, ladies and gentlemen. I think we're about to have some sort of a dip. I'm not saying it's going to be huge. I don't think so. But at least another buying opportunity on the downside after several days, a week. Next chart, still going up and up and up, 10-minute NASDAQ. The Russell has done this, the Dow has done this already, bumped against the top of the channel, got overbought, pulled back a little. Now we're trying to make new highs, but today it's a doji, no higher high, no reversal capable at the moment unless it made, which it didn't, a higher high. So maybe it'll just start dropping down some more. And the 10-minute, as you can see, close, but not quite a higher high than yesterday. Next, the 1-minute chart on the Russell, daily chart on the Russell has already done this and is showing you exactly what I think the other indexes are about to do. In other words, telling you the future maybe. Gaps are closed, top of the pattern is tested, overbought conditions were there, and it's dribbled back down several days already. This could be, looks like it's going to be, maybe, a new low close since the high at the top of the wedge or channel. Now, the short-term price action. I'm going to drop a little tiny bit of bombshell here. I've been working on this for many years, and there's a strategy we have called flip. It buys and sells extremely quickly, maybe within a minute or two. Obviously, a scalper's paradise if it continues to work as well as it has. I'm not ready to show you the details or advertise it or let people know about it unless you email me and are very, very, very curious, which you might be. But during this break a couple of days ago on the Russell, actually, just a moment. Why aren't I getting December 5th in here? Something is acting a little strange here. Let me do an update, which I shouldn't have to do, just take a few seconds. Loading and updated, but not for some reason giving me current quotes. So I'm going to have to apologize. I didn't see this morning. I've only got this up to and including 1500 yesterday afternoon. I've got to fix this. So skip the Russell 1 minute and probably the daily also, because that would be out of sync as well. But sorry about that. Ninja data feed, something like that. Try to solve the problem quickly. Now, bonds up a couple ticks. I've got this working very well. We had a low made during November. I was kind of expecting it in October, but we have it in November. We've now made new highs, higher than most of the highs in October. Good enough for me. The trend has changed up. We had a correction yesterday into support, and now it's about to make a new high, it looks like, against a little resistance. Now, we are close to overbought, so there might be a little bit of a struggle on the upside here, but I love the way that it's acting, please remember that for months now, I have been talking about a giant two-shoulder, double shoulder, head and shoulder bottom that started forming in October of 22. The inside shoulder, second shoulder, is March of 23. The bottom, which we got a buy signal, ER buy signal, the low day for years, October of 23, the bottom of the market. The inside shoulder, one of two, was April of this year, and now the November low of 24 in progress, starting to work its way up. Why am I so hot to trot about this pattern? My God, ladies and gentlemen, the upside objective is 150. It's going to be one of the longest term forecasts I've made. These patterns don't occur very often. 2-year bottom or top formations are not very common. Obviously, you need 2 years just in order to build a pattern, and then usually many months, maybe a year or two, for it to evolve, hopefully correctly. This is just starting. So I am looking for a move up, zigzagging its way up, of course, taking a couple, 3-4 months maybe to get up to the neckline, which is in the ballpark of this resistance area at 126. Breaking that would be the breakout of the large formation I'm talking about and an upside objective of 150. All the way up to here. 10-year notes. Same story. And we're now out a few days ago of our great short sale, which was made on the day after the signal day, which was September 17th. ER1 allowed in ER3 short the next few days, and it happened the next day. ER1's overnight position also made a great trade, didn't last as long. They have different stop movements. They're adjustable. All this has worked great past tense. So now we're flat. Unfortunately, we didn't get a signal at the bottom, so I'm not officially ER long. But, you know, my commentary has been pretty spot on. A little late as far as the bottom and a little bit lower than I expected, give or take a few weeks. Instead of October, it's November and a little lower. You might remember looking at my YouTubes from a few weeks ago that I had a circle or a rectangle square in the month of October, and it was a little bit higher than the bottom here. But anyway, we're on our way up. Now this pattern, the double head and shoulder bottom for 10-year notes, has a minimum upside objective, and I said minimum 126.5. Crude oil, neutral at the moment. I think it's going to break down and make new lows and get into the support area, and we'll see what happens next after that. But the big pattern is a lot of sideways mess back and forth here between a rock and a hard spot. But my longer term thought is bearish. Next chart, heating oil has a more bearish trend over a significant amount of time, well over a year. And I'm looking for, and it's starting to do it already today, new lows below the lows in October, below the September lows, and challenging the support area down below here, the yellow zone, and the bottom of this broad downward slanting channel. That's heating oil. Next is natural gas, which had a head and shoulder bottom, my favorite pattern. It worked great. Lasted only 2 or 3 days. Got to its minimum upside objective, and all of a sudden, kaboom, bearish engulfing sell signal, which is working great. So we caught the high of the rally at an upside objective, creating a double top of sorts. Not really a great example. But we're still short. Almost a new low close. Just happened in the last couple of days. And our green trade line is right here, the current tick, 30.074. And our stop is right there at about 32 approximately, give or take a few ticks. It'll be a good trade if I get stopped out there, and a better trade if it keeps on going down, which I think is quite likely. We're nowhere near oversold. It could easily test the support area, this yellow zone, and go lower. Next, are we having a head and shoulder top in gold silver, and platinum. Maybe. I don't like the fact that the gold in particular neckline is so downward slanted. Yeah, I'm well aware if you do this, the slant will be a lot less, but it really doesn't make any difference. It's just a visual. Okay, leave it like this. We're having a new low here and a new low close probably for the last week, but that's the trigger point for a test of the lowest low, and that would be getting below 26.27 and staying there on a close. Then I think we're going to be heading down to this neckline, and if this neckline, which is cheaper and cheaper and cheaper, lower and lower every day, is broken, I have a downside objective, and I should move this to the right a few days to adjust for the amount of time and price that it will take. Now my objective is a little bit lower, 22.80, let's call it. And that's gold. Silver, same story. Move my objective line, measuring stick down a little bit lower. Now it's a little below 25, but we should be continuing to work lower. Yesterday I had a little concern about that rally. I thought it might carry up a little bit more and start to cause me some concern about this. But now I'm thinking double rally here. There's a double rally there. There's sort of a double rally here. There's the pattern: shoulder, head, shoulder, neckline. Let's see what happens. Platinum, we got a sell signal in the exact high day. We didn't on silver, and we didn't on gold, although it was close premature. Platinum again, right on the money. Great. Let's rescale a little bit. So we're slipping here. Low and last almost. Looking a little like silver. Yeah, more like gold. Okay, so getting closer to the neckline. Downside objective on this pattern is going to be 800 and a little bit lower because I'm now moving the neckline downside measurement a little bit to the right. Yep, I'm going to say slightly below 800 now or lower. Next, copper. Not the same, but we got a sell signal in the high of the rally. That's great. And the double bottom did produce an upside objective, which we rode up from our first buy signal all the way up to there and got stopped out, and then we got short. We're still short. This is our trailing buy stop at the moment. I might be able to lower that some. Probably going to leave it alone. This high today could be very important. It's right up above a few highs a few days ago, a week ago, and now it's turning down. I'm expecting a challenge of support down here below 4.1, breaking it and trending even lower, maybe a lot lower. Now grain. I don't see any long-term bull starting, although some minor chances, which I'll talk about if it starts to develop. But for now, I think support's going to get broken. I think we're going to make a new low for the whole trend in beans. I don't know how low it's going to go, but we do have a channel to work with, and that is a lot lower. In the next few weeks, I don't know, 850, 840. Yep, that's what I've got to say. I think this support level, which is held extremely nicely for a month or so, is going to get broken. And then it's going to crash into new lows real soon. Soybean oil, a little higher on the day, looking for approximately the same results. I don't think the support level at 40.60 is going to hold. I think this bottom formation, which looks feasible, potential, is going to work. So I'm looking for lower lows. Unless I see some kind of bullish reversal, we're nowhere near oversold. It could easily break into new lows. I can't come up with anything bullish. Next, meal, support level challenged, profoundly important, going back all the way to February, the end of February, beginning of March of this year. There's the higher highs were trying to be made back here in October, it failed. And now we're all the way down to the lowest lows. I think it's going to get broken. Looking for lower levels in soybean meal, soybean or corn. I got to say the same thing. Today, we do have a bullish engulfing at the moment. That's nice. But we haven't been oversold since the middle of October, where we got buy signals at the exact low. But the bullish engulfing's nice. So maybe we'll have a little bit of a rally here. Corn, frankly, looks the best friendly, bullish of all the grains, but not great. Just because of a bullish engulfing, one of my favorite daily price action patterns doesn't really cut it completely. I really need oversold in order to get, obviously, a buy signal out of my ER signal system. Wheat, just a little bounce off of support. Yesterday's low, almost oversold. Well, it was actually yesterday. No surprise it's bouncing, but for how long, how much? Well, I can't rule out all the way back up to 615. I kind of doubt it. Maybe 575. Yeah, I'm going to go with that or less. I just can't come up with any confidence on any major or substantial bull move in grains. Okay, cattle. Kabam! We broke all the lows for the last couple of weeks today, down a chunk, low and last, broke our support, broke our sell stop under a previous long position, which we bought on November 15th. Nice trade, not fantastic. Could have done better. I don't want to show you manipulated unless I tell you about it. Stops and this is a manipulated one. This is the one I wanted to remind you about. I had a flat, you can look at yesterday's YouTube, protective stop, the yellow line, because of our default kicker, the speed at which the protective stop moves. And I tightened it up a heck of a lot before this happened this morning, just a half an hour or so after the opening, because the market was starting to slide and it hadn't hit the stop yet. So at 186.80 earlier today, this was a good stop. But in the meantime, it got hit. I'm out of the trade. I raised it apparently very appropriately, and we're out. Flat, downside breakout, minor. But what's the bigger picture? Major resistance has stopped this market on 3 or 4, 5 occasions at or above 189. Let's call it 190 flat. Yeah, 190 will work. Been above 190 5 different occasions going all the way back to June, and it couldn't go further, including a bearish engulfing on the top of the market right there. Almost overbought. I almost got a sell signal, which would have been red. There's one, didn't work. There's a buy that worked great, a buy that worked very nicely. No fantastic sell signals lately. Next, hogs, overbought. The bullish resistance line, which means bullish, it's trending up. Resistance means the market is currently trading below the line. So if you go up to the line, which slants upwards, you stop. And that's what it did. And I explained this weeks ago. So we're now making almost new lows. Yesterday it was for several days. I think we're going to come down to 82.9 or a lot lower. This is a fairly significant resistance level. And unfortunately, we didn't get a bearish engulfing ER sell signal, which would have turned red. Like that one didn't work. That one, small loss. This one, we had a fantastic 1 to 2 day trade back there way in April. Bullish. And that's it for the moment. Now, one more chart. I'm talking about a stock. I started talking about this approximately 2 weeks ago because the pattern that we've got is really idealistic in my opinion. This is a 2-year bottom that has past tense. We have a 2-year breakout a couple of years ago. Weeks ago. And just in the last day or two, new highs, looking great. Downside correction held at support. Market's getting a little overbought occasionally on the way up, but that's normal for a bull market. We're getting downside corrections, which is normal for a bull market, just as long as they don't go too far for too long. Very typical price action. I am bullish to a minimum upside objective of 134. This is a stock. I don't know I think they make credit card readers for like cell phones and small devices. I think that's what they do. I'm not sure. I don't know. I don't care. I'm a chart reader. I'm a chartist. I'm a technician. Show me a chart. So anyway, new high today, slight bit, looking great, but overbought. So pull back to this breakout line, 98.50, close a couple of small gaps, turn around and make new highs again. And it could make new highs today and tomorrow and the next couple of days. Overbought is simply a warning that you are fairly likely to turn down, but you have to watch fairly closely. And that is it for today. Thank you very much, ladies and gentlemen. You have a great day and profitable trading to you.